Hey, good afternoon. So I'm just gonna go through a couple forex pairs, maybe a couple crypto, and maybe a couple stocks. But I'm gonna try to do this as fast as possible. So our targets were hit. Both targets were hit today on the U.S. dollar, Canadian dollar. Hey, we're just using simple market structure, guys. Setting up. Uh, got a nice impulse. Our impulse gives us an opportunity to measure it to give us a next target to the upside. So we was able to get this, okay, and we got a nice little pullback. And this was the target area zone, and this was the top extension target. So we was able to mark those off, and I'm able to play that for you so you can see how that worked out for us. So targets were hit. Simply just looking at market structure, we're using our Fibonacci extension tool to essentially just help us get a upside target, but also we look at market structure as well. So it's called confluence. So do we have to use the extension tool? No, we can look at market structure and we can say to ourselves, well, this is a major area that hasn't been revisited yet. So this could be a likely area for price to come back to. And we also have a nice area up here where a nice area of market structure as well too, and price came here. So if we were just trading without any indicators, of course those what we'll be looking for. Maybe we had a nice little inverted. We got a left shoulder head, and then we got a right shoulder, and we're pushing up. This is on a 15-minute chart, so if we went on maybe the hourly, we could see something else. Okay, see a little bit better. If you look to your left, now could this be considered a double bottom? Sometimes you can say it is because wicks, like I said, wicks leave clues, but at the same time, wicks, it's not a definite. You get what I'm saying? It's not saying that, hey, well, it didn't do a double bottom, it wick down. You have to think of everything as more like regions instead of a defined point. So this is basically a zone where price came to. Okay, so this was a demand zone, and up here a supply zone. So in actuality, while I'm doing this video, this will looking like it could be shaping up for some possible shorting opportunities to come back down. We do need some form of a correction, which we could get. And so what can we do? We can actually measure once again this impulse. Okay, and we can get our retracement levels down. Okay, we're right at the 23%. We do have a 23% trading rule. All right, once we cross it, we do want to see price come back above it. But once we get a final cross of this level, okay, we're going to be looking for price to potentially retrace back down here to the 61% area. So we would be looking for trading opportunities for price to come back into this particular zone. So that's something that we will be looking for right now. So that will be my bias. I'm not looking to take this trade up even further. Okay, sorry about that. And we got a nice. We still. This is still a nice, what they call a Bart Simpson pattern, still shaping up. We're looking for a deeper move. This is the target zone that we're looking for. And let's say we could be able to really hold, sustain, and keep it down to here. We're talking about a 235 pip to the rim of that zone, and basically a 246, and then at the bottom of the zone, we're talking about a 262 pip drop. So that's something we're looking for. We really want to take between 3 to 4 standard lot sizes on that. That could be a quick $8,000 to $10,000 payout, if that were to occur. So I'm looking more for downside now and not upside as well. Okay, let's just take a look at BTC right quick. Bitcoin. See what's going on. All right, we got a nice little impulsive drop to the downside. All right, we already hit 35,000 level. Okay, now let's see. Let's go ahead and clear all this off the chart. Okay, and on the hourly chart, let's see what we got going on. All right, let's go ahead and get our levels. Yeah, I got resistance up here at 40. What is that, 48? We went to 48? Oh, that's back in March. Okay. And we're going to go here. Okay, so here's what we got now. We broke the support level. We haven't retested yet. So there could be some counter trend opportunities. The price possibly could come back up here and revisit. However, you got to watch this area because all we're going to do is basically come back up here, retest, and then potentially go lower. All right. So right now we're in a clear downtrend. So the this is choppy. So now I'm going to use indicators to help smooth this out. So for one, uh, I'm gonna put the Bollinger Bands on. Okay, we're at the bottom of the band. Still doesn't look all that great. I may need to go on a higher time frame. Let's go look at look at our moving averages. All right, we're definitely in 100% bear territory because we're below all three moving averages. However, we're far away. Price does not like to be far away from the moving averages. When it is, price likes to come back here and touch it. So although some people be looking to short this, that I mean that's fine. You can. To me, it's overextended to the downside. I'm not looking. And then we got a nice little rejection pin bar. So somebody came back into the market. So, some bulls, maybe some institutional buying. Remember, institutions or big whales are the only ones that can create these wicks. Not you as a retail. You don't have enough purchasing power. So something big came in and got this. And this is probably due to just the derivative market. Got contracts out. So somebody made a nice little gain right here on their money. And we're going to probably play a cat and mouse game around these areas, trying to see with the sentiment, to see how many bears can be trapped. So this is going to be potentially a bull or a bear trap for what we're looking for. If you look at this right here, somebody could say, "Oh, this is a bear flag." Not really. I'm sorry, a bull flag. Uh, what we had right here is just a lot of bulls. This is a really classic bull trap. We had a bull flag right here. We had a breakout. All right. Traders came back in here and they said, "Hey, we're going to retest this area. We're going to go long now." And then look what happened. They all got liquidated. Too many people got too happy, especially with the news, with the rate hikes and all that stuff. So too many people just got too comfortable to think that, hey, we're good now. We're going to be good. We're going to get this little rally. No. Will we get a summer rally? I believe so. I think it will still be somewhat short-lived. I do feel like the fall is when we will see some stuff, and it's still potential that we still can go in a couple of months of a real long, drawn-out, called a crypto winter. So that could happen, but at any rate, it allows people to continue to accumulate um, as much as possible as well too. Let's go on a higher time frame just to get a bigger look at what we're dealing with. All right, and now we can move these levels. Okay, now we have these levels that we have to. So 28,472 is a strong area. Okay, it's a lot. This demand zone is really there. So what could happen is that you possibly could have a lot of orders sitting in this zone because price was here a lot. Okay, price came here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Like 17 times prices come into this area to get loaded, right? So this demand zone is pretty strong. And there's some orders down here that probably want to be filled. Now, if we want to get technical, could this be a head and shoulders pattern? Maybe, possibly. But I wouldn't really try to worry about that at the moment. We do know that we're really in a range. Okay, we're not in an expansion state. So we're in a range. Things are a little different. Okay, I'm not saying this is what we want to see, but this is what you expect as a expansion state. We're not in expansion state right now. Okay, we expanded, we pulled back, and then we expanded again. All right, and then we pulled back, we went sideways. Okay, and then we expanded again. So we had a high, higher low, higher high, higher low, higher high, higher low, higher low, higher high, higher low, higher high. But this failed. All right, so now we got low, higher low, low, lower low, higher low, low, higher low, higher low. Now we're just at a low. The question is, are we going to get below this level, which is 32? This will give us the lower low. Okay, could we trend down? Possibly. What we can do now is we can see where we are with as far as the Fibonacci extension. I mean the retracement. So okay, now that's ironic. The demand zone is actually sitting at the golden ratio, which further gives us the confluence that we're looking for. We really believe that price really would come down in this 28K region. Okay, that this is a great area for it. Now, 70% is still solid too. The price could come to, which gives us to the 23,000. What we want is that you really want price to probably just come on down into this area. It's going to get an alt prices like a phenomenal deal. I mean, the tables are going to be reset. It's going to be great, but a lot of people are going to quit. They're going to get out of the markets. I get it. It is what it is. Hey, you live and learn. Some people regretted it before. Some didn't. It is what it is. So do what you do with this. Now, can I be wrong? Yes, price can do whatever it wants. You have to respect the markets to say that, hey, my analysis does not have to work out. All right, let's look at Tesla. All right, so we're on the daily with Tesla, and their next earnings report is in July. And for this earnings, okay, they beat expectations, surprise, so they're pretty good on that. But if you notice something, they beat expectations. Let me see. Yep. So they had an 887 million surprise. All right. They estimated a $17.8 billion revenue, and they made 18.75 billion in revenue. But what do you notice? Price drop. So that's the sentiment that we're talking about. And typically, when you see a company have great earnings, you would think that the price would just start to skyrocket, right? Well, in some cases it do, but in some cases it also creates a bull trap. So the bulls got annihilated. Look at this drop. Okay, so that further lets you know is that a lot of times, guys, you just can't go in the market just because you got good news. It's just it's going to go right. Um, Now here they they still beat uh, their earnings a little bit. But they still drop right here. They barely missed by 93 million, but still was dropped. So earnings is not really a time when we really want to buy. To and if you are looking for, you're looking for really a downside. Right here, we had earnings that have dropped. So what I'm doing is I'm looking at historical patterns. It seems like every time Tesla has a earnings, a week or two later, they're starting in a downtrend, and you can use that to your advantage if you're doing option contracts or whatnot. Let's look at Apple. And that's showing the same type of pattern. So these tech stocks, they sort of move the same. Just like when you look at Bitcoin and other altcoins, they all start looking the same, right? So yeah, we got this nice little box area that we in right here. All right, and to be really true, if you want to be bullish or bearish on this, it really needs to break. It's either going to break on the upside or break to the downside. I'm betting possibly more to the downside. Uh, Not 100%, but once again, it's in a range, and we need to see something shape before we, make some moves. But there are some short-term trading opportunities uh, by focusing on this zone, and so the day calendar is already closed. And so what we want to see tomorrow is, or the next couple of days, is that I either want to see this violated, this candle. I want to see this red candle engulfed, or I want to see this red candle engulfed by another red candle to give me some short-term trading opportunities. And I would be looking, if I was going short, first I got to look at this level here, but ultimately be here. And we get here, we possibly could have a double bottom, and we still can get some push to the upside, but we also can break this. But if I was shorting this, I'm only going this level. And if I was going long, I'm only really still going this level from right here. Was this $163 to 166? Some option contracts that might be worth it. We may could get a 30-40% gain on our money if we do take that. But this is what happens when you're in ranges like this. You got to be realistic. You can't say, "Oh, if we break right here, I'm going up here." No, you got all these levels you got to visit first. These are like stop speed bumps. You got to slow down. You got to look. So that's that on that. So Netflix got destroyed last week. You know that for real, right? So let's see what Netflix is doing. Okay, so Netflix is just continuing to drop it. Ooh, 188. Let's see what they're. And what's crazy is that they wasn't that far off on their earnings. And there was only 61 million short. Estimated 7.92 billion and made 7.86 billion. But yeah, this drop. And what's happening is the Bulls are basically getting really squeezed out of their positions, and they just continue. They getting crazily liquidated. The Bulls, you look right here. We had a double bottom. I mean, look how many loans probably came in the market and just got slaughtered again. We might be looking at the same thing here. So yeah. And also, guys, what you want to look at is you really want to trade structure. So when most people teach structure, you trade structure to structure. But what I mean by structure is this: like this right here is not enough structure. This is though. This is a lot of structure. This is good. We could trade that. The one below, no, it's not enough data. This is we can do this. And of course, it'd be more something like this, right? We can do this if price violates this area, we look to go short. Shorts would have won. If price violates this area, we look to go long, maybe to cover this gap. It did not do that. So what are we talking about? Nothing. We just here, right? So what happens is, let's do a bar replay right here. Okay, so if I come into the market right now and I'm on this particular candle, I don't really have a lot of structure right now, even though it's part of this greater structure. Like you're on this candle, and the question is going to be is you do not know what's going to occur later. We can make assumptions, but sometimes what gets us in trouble is trying to trade a single candle and not taking things into consideration. Now we're on a daily chart, so of course everything is going to be compressed. That's why sometimes it's very great to go down on a lower time frame, which we will do right now. Let's go down to the 15 minute, and I normally trade off the 15 minute. Now look what we're dealing with. You see, before it was just one candle. Now I got structure. This changes the game, and I can play my game. I can have this level right here, okay, and I can have this level right here, and I come into the market and I say to myself, what am I doing? I'm only going to buy if price breaks here, and my first level I got to look at, I got to pay attention here. But if it breaks here, of course I got to scoot over and see what's happening because it's so far away, and I got to find what's the next area. So really down here, so I can look to take the trade to here, to this level. If it breaks, so that's what we're looking for. So let's play. All right, bam. Target's hit, right? Now, you know what's so funny? Look at this though. These are these traps. Look at that trap. Price went up here, it stopped here. What did we say? If it breaks here, if it breaks here, we take the trade to where? Here. So you would have got in and you would have been out right here, right? Then what happened? Price then broke here. We get into the trade where we take it to, right here. We've been out. Simple as that, right? So that's what I mean by structure. So try to get in the habit of looking for structure. You need to go down a lower time frame so to get a better view of what's happening. Yep. So let's see, man. All right. So who's playing this zone again? Got here. We got here. Now, this is a great example of two. Sometimes we want to see a candle actually close above this level before it really taking it. So those some things you need to keep aware, be mindful of, so to speak. But at the same time, too, if you stick with your strategy, you're gonna have your winners, you're gonna have your losers. So if you're a breakout guy or a girl, uh, it broke out, you can take it long. Okay, so if we was using an engulfing strategy, okay, what is this? So this counter has been engulfed, and so your stop loss will be here. So let's see what happens. Okay, we're still in the trade. Targets hit. All right, pretty good. So what did you do? Your stop loss is what? Below here. It got close, but hey, you great. You made it using simple rules, right? So it happened. What we were looking for? We're looking for what? The price to either, candle break above this level or break below here. Just keep it simple, guys. Greed will make you do some crazy things, and fear will too. So at the end of the day, as long as we learn how to just stick with the trade system, quit looking for the golden ticket or whatever, the holy grail. It's not there. All right, just really risk management. Let's look at the dollar index, and we're gonna go to a higher time frame. But before we do that, where we at? All right, here. Look at that. And it's the level. You already know the routine. It's the level. I'm not using no advanced techniques here and nothing. Just simple market structure. Look, if we break below here, we're probably looking for what? Take the trade down to this area over here. Okay, preferably this one first. That's what we'll be looking at. If it break above here, but you have to be careful because this is like a bear flag. Because a bear flag look like it's going buzz and then bam. But that's why you look at some of the structure and you see what's occurring. And really, I don't want to look for buying opportunities on this. I want to look for shorting opportunities. Simple as that. Let's go back to this level. If we was over here, we got this and this. And we're not gonna do that with, we're gonna go into the bodies. And if we go back in time, what we're looking for? If price break here, looking to go short, right? And where you looking at? Structure area right here. Okay, that's what you would have did your box like this, bam, target's hit. So keep it simple on that. So just did the dollar index. It's great to be able to actually chart, the index. And so now I'm on a higher time frame, which is the daily, and this is what we're gonna look at. We have this and this. So I'm not really bullish on the dollar until it breaks above that high of 103,942. And if it breaks below here, which I am really looking for, we know we at least got this level that we can come to because we got clean traffic. So what does clean traffic mean? It means there's not a lot of roadblocks coming up. It's really a nice little strong 1, 2, 3, 4, 5, 6 solid days really of bullish pressure. Okay. Like right here, it's not a smooth. You get 3 strong days, then you get some sideways, then we move up, and then we get this stair step back down, right? And with this stair step back down, you can say to yourself, this is somewhat of a little bit of a clean traffic, and it cleared it, right? So even coming back up to the upside, somebody can say, hey, this is clean traffic, meaning it's just all solid. It's not a lot of choppiness, okay? You look at all this over here, this is choppiness. It's not clean, which means that if we come back down, you got all these levels you got to deal with. Um, this is somewhat clean a little bit, so we know that these areas could be revisited. Um, like right here, this is wasn't clean, but also although it came down, it still was a lot of. You see all these little green candles and just rejections, pivot points, all kind of hammers, tweezers, all kind of twin tops, all kind of different patterns just showing up candles formation because it's in a clean traffic, right? So you're gonna have that. So of course, if you're taking this trade to the downside, you could feel like you just getting, you know, whipsawed all over the place, and it's not just a straight, clear cut, just go right. This is a good one to show that although if we was looking to take this trade, we see this happening down here, and we got a nice structure area, and we will be looking at this. And basically, if we violate this area, we want to go long, which we did get, but we got rejected and pulled back. So we would have lost this trade, which is fine. People act like losing is the end of the world. No, it comes part of it. But if you stick with your trade rules, like you'll be more profitable than not, right? So okay, that didn't work. Okay, now let's do this. We're gonna stretch this out, and we're gonna see if this area was revisited again, and it was. So you got to remember, this still was a key area. So you can say to yourself, "Hey, I still may have another opportunity. Price is back here. You get a nice little engulf here. Now you can get into the trade, and you can trade it back to this level, which it did hit. Of course, it went higher, but just because it failed early doesn't mean that it won't go back. You get what I'm saying? Like this right here. This could have been shaped up as a Bart Simpson come to the downside, but it didn't. It failed, but that doesn't mean that it's not over. We still can come back to these levels. All right. So I don't want to keep you forever. Got some food on the grill I need to tend to. But I hope this helps keep things simple, guys. Also, remember with crypto, it is a currency. So it's not stocks. You can't really treat it like a stock, even though it got some characteristics of an equity. But you have to learn forex to really understand crypto because they're currencies. So if crypto is dropping, it just means what? The dollar is strong, or whatever currency that's picked to get is strong. As simple as that, guys. Like I don't know what else to tell you. When you see a Bitcoin USD chart, if the chart is like it's falling, you like the Bitcoin is crashing. No, it's not. Dollars are strong, and then if the dollar is going to be weak, then Bitcoin will be strong. And if you understand where we're going economically with the dollar, we know that it's being devalued. We know that they're printing more. We know the interest rates are going to be raised. We know the economy eventually is going to have to reckon with all the things that we've been doing to band-aid our economy. The dollar is setting up to be really, really challenged the next couple of years. And if that's the case, then crypto has a strong, strong case to be very valuable a couple of years from now, more than it is now. And so I think what's happening is that some people are getting too much of wanting the quick money and not understand the long game. And as long as these prices are dropping, and if it's a very formidable, reputable project, don't hesitate to come up with a great plan to accumulate as much as you can. And it's not to say that we won't ever have a failed cryptocurrency, which we've had plenty of them. But the good thing is that most cryptocurrencies that's been in the top 50, top 100 have really relatively like held their value and been strong for the last 4 or 5 years. So that's a good sign. But we're all still in a speculative market. Um, some do have working projects, some don't, but they're getting stronger and stronger. And by you investing now, you're taking on a risk now, but the reward can be very great. So this risk reward is very great for me, and I hope it is for you. Hope you enjoyed this video. Hit the like button, subscribe. Also, if you're not a member, we do have the membership, which we're changing more to a vault style. We're going to have just a lot of access to a lot of resources in the vault that we will be adding more content to. So you can join darkhorsecoins.com here. Check out the membership page. $375 break down everything for investment plans, strategies, buy zone alerts, etc. Here's a little glimpse of the members area. Breakdown. We got reports, reviews, etc. So, yep. Hope you guys enjoy the video. Like I said, hit the like button, subscribe. All right, you have a great day.